Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I always do, I've left my lines on the chart from last week's report so you can see how the forecast has worked out. And it looks as though every single market we reported on last week, the targets were hit, the forecast worked out 100%. And let me go over the diamonds here with you so you can see what we have in store for us next week. This was the forecast from last week. It was a very short line where I said we would most likely move up to test that resistance line, and we've done just that. We've closed very close, within pennies of my target, just a little bit over that. And right now, if you look down at the very bottom, we have a green candle. As slight as it may be, it is a green candle on higher volume. So that's telling us that the buyers still have a little life left in them. So I think that we could very well go up to this next level of resistance right there. That is going to be my target for next week, and then I believe we'll start to pull back. Let me get rid of this previous line so that we don't clog up the chart with all these different lines, make it nice and clear for you. So I'm going to erase this line now that we've hit our target, and I'm going to project a two-part forecast on this where I think we're going to move up just a little bit to test that resistance, and then I think we're going to start pulling back just like that. One of the main reasons that I say we're going to pull back is because we have the CCI down here is no longer setting higher highs with the rest of the market. It's kind of going flat right there. That's a sign of weakness, also known as a divergence. And so once the market starts moving up and hitting that resistance, I think we'll start moving back to stay within this price range. I'll even erase this former trend line right there, again, to get a cleaner chart. All right, now if we look at the VIX, that's a volatility index for the S&P 500. We have again hit my target. I'll zoom in a little bit more right there. I said that we were going to move lower on the VIX right there. We closed exactly on my target point right there. The end of the line is the target. And if you look a little bit closer, you'll see that this is a bearish engulfing pattern for the VIX, and we opened on the high, we closed on the low, so that is a sign that the VIX will most likely continue to drop. So I'm just going to extend that out just a little bit like that. And if you've been following along, you'll know that the volatility index is inversely related to the S&P 500. This level down here is the extreme support level that I think will hold, but until then the VIX is still dropping, and we're very, very close to a turning point. And I'll show you what I mean when we look at the S&P right now. Remember, the VIX is inversely related. I said that the S&P will most likely move up. That was my forecast from last week, to test this resistance. We did just that. I'm going to erase that line now and move it up just a little bit to this level of resistance right there. I think we're going to again test that, and then I think we'll start to pull back on the S&P 500, and again keeping all eyes on the volatility index itself. I think we're going to go up, hit that resistance, and then I think we're going to start to pull back, again staying within this very narrow trading range. Again, if you look, we saw a higher high from last week on the S&P, but we're seeing a lower high down here on the CCI. That Commodity Channel Index is a great leading indicator for showing weakness in a trend, particularly uptrends like this. And so if the CCI is showing lower highs while the market is making higher highs, that is a price divergence that we cannot ignore. So that's my forecast for the S&P 500. If we look at the Qs, that's a NASDAQ market, same thing. Look down at the CCI, and you'll see lower highs as we're testing the resistance up here from December 3rd. This is going to be my forecast. I'm leaving that in place. We did test that. I think that the Qs are going to start to pull back, and that could very well start to create a domino effect with the rest of the market. So keep an eye on the tech sector. If we look at a more broad-based index in the Russell 2000, again, my forecast was that we would move up to test that resistance. We have done that. I'm going to leave this in place for the Russell 2000. I think we're going to start moving lower. A couple of reasons why. The CCI down here is showing a constant high. In other words, we're not seeing a higher high, but we're seeing higher highs in the Russell 2000. So that is considered a divergence. That is, again, another sign of weakness. So if you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. Right there on the front page, you'll see a link at the top that says videos. That's our video library where I create very short videos called market shots. These are educational videos that'll teach you some of the lingo that I use during the course of these weekly reports, and I think that'll be helpful. Also, if you're interested in mentoring, that's a one-on-one personal mentoring service that we provide. I have 2 openings coming available at the end of this month in February. So I have 2 openings. I only take 5 students at a time. If you're interested, I offer a written guarantee on the performance of your account during that mentoring program. Ask me about it, and if you'd like to inquire, the only prerequisite or requirement that you need to enroll in the mentoring program is you need at least $100,000 in your trading account to make it worth your while. So again, just click on the contact link right here, or send me a direct email at aj@themarketguys, and I'll be more than happy to speak with you on that. Until then, have a great weekend, and we'll talk to you later. Bye-bye.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.